everybody. This is Caleb. I'm joined once again with Eddie Gamez, and today I want to talk about something where everyone knows about. Obviously, there's smart moves when it comes to when you're applying for a loan. There's smart things to do, and there's very dumb things to do. But when it comes to the opinions of the best things versus the worst things, that kind of goes all over the place. So instead of just hearing it from me and you wondering like where I get it from, well, straight from the source of a guy who has to deal with the applications on a regular basis. I guess it's to put it simply, what are kind of like do's and don'ts when it comes to how to handle your finances while applying for a loan and in the loan process?
Yeah, so once you're in the loan process, I'd say the number one thing is to check with your loan officer if you
Hmm.
plan to buy a house or if you're under contract to buy a house before making any major moves financially. I see people, it comes to credit, open new accounts or close accounts. And those are things that might not necessarily ruin your chances of buying a house, but it can cause a lot more paperwork, a lot more scrutiny on your file, things that can definitely put your file in jeopardy once you're under contract and make you lose a house. With credit, just make sure and talk to your loan officer first. When it comes to employment, I've seen people switch jobs while they're under contract. If you are planning on switching jobs, let your loan officer know so that they can help you plan ahead. Because sometimes the qualifying income that you had from one job may not be counted the same and may not be treated the same at your next job, depending on the kind of employment you're moving from. I've seen some people move from W-2 employment, so being paid a salary or hourly, to something that's more like a 1099, which is as a contractor or being self-employed. That will blow up your chances of buying a new house.
Okay.
And then there's just nuances on the timing to of when you're making the switch and how long you have to be at that new job that determine if and when your new income at your new employer is going to be qualified income.
Well, that makes sense. Well,
I've seen people spend their money, so pay off bills when they had that money and they needed it to pay off closing costs. Um, get gifts. So a lot of people have gifts coming from family members. Those gifts have to be sourced unless they're treated a certain way. So sometimes a family member is going to give a gift and they just want to cut $10,000 or however much it may be. Well, when there's a large amount of money coming into somebody's bank account, an underwriter is going to ask where it came from. They're going to need a letter signed by whomever it came from and a bank statement from whoever it came from showing where those funds were sourced. Some family members don't want to provide that additional information, and it makes sense. It's very private information. There are ways to get around it, but again, it's one of those things that can kind of kill your chances if you don't check with your loan officer first.
okay. So I know a lot of people think of the very like ways to screw it up of just being reckless. So it sounds like it could also just be things with like really good intentions.
Mm-hmm.
Like you said, because like a gift from family, like there was no ill will there, that they just wanted to help out.
Right.
So, or in a situation of maybe you had extra money, like a bonus, or maybe you just had a really good month depending on what kind of job you have. So wait until you're handed the keys, then pay off all your.
Potentially, or just disclose it to your loan officer before you do so that there can be a game plan involved.
Gotcha.
So if you plan to sell an expensive bike or an expensive motorcycle or car or boat, there needs to be a bill of sale from that transaction
Okay.
that the underwriter can see to go ahead and prove those funds be used for down payment or closing costs. So, that's a great thing to be able to make some money off of, sale of
Hmm.
your personal belongings if that's what you intend to do. But you want to make sure and do it the right way, just so it doesn't come back and hurt you later.
No, that makes sense. And actually, the thing I've heard from you quite a few times is to disclose with your loan officer. So if there's a moral of the story here, it's no matter what it is like to make sure you disclose it. Talk with your loan officer, make them aware. As much, it's kind of like how you don't like surprises. If someone were to suddenly spring something on you, don't do it back to you don't do it with me as a realtor. Don't do it with your mortgage broker. So make everything out in the open because the more clear everything is, the easier everything goes along. So I do appreciate because people think of the bad ways you can potentially ruin a loan application or especially under contract. And I tell you horror stories of people who have blown up contracts because they decided to splurge right before closing day. But there's other ways it can be done that you wouldn't think about. So I hope this has helped and maybe taking a little bit of pressure off of knowing not everything has to be perfect. but you do have to know when to, there's a time and place. So I hope this helps, and I will see all y'all in the next one.